There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Pre-market trading. Again, this is Kyle Bazzi filling in for Joel O'Connor this morning, my co-host Dennis Dick. I want to just mention that we are honored to be sponsored by Charles Schwab here. If you don't know, just ask Chuck. But up now is one of my favorite guests, regular Fari Hamzei. Good morning, Fari.
Morning, sir. How are you?
I'm fantastic, dude. I know Dennis is he feels like the bottom's dropping out, a punch in the gut here. The S&P futures here just getting smoked. What are you seeing?
Well, we have more bad news. Most of this is driven by Europe. Again, as our Forex strategist yesterday mentioned in an interview with you guys, Ashraf Laidi, the problems are starting in Europe, and we may be the best neighborhood in the area, but we're not unaffected. And techs are holding up somewhat, relatively speaking, from a chart standpoint. But as I said about a week ago, based on the internals, and I think Joel asked me about it. He says, because we had a big day, and I had written down, big day up. I said, guys, if I look at the internals, and as much of a bull I am, we're not near the bottom. But proverbial baby with a bathwater, in our case, in the Navy, through the torpedo tubes, is not there. People are not throwing out their babies. Not yet. The capitulation, I don't see it. How do we look at that? McClellan oscillator has to be very low, under negative 300, maybe 350 negative. Up and down volume, a couple of 90% days, several days apart. So it's a second flush, as Jerry Seinfeld calls it, courtesy flush. And then you want also really a massive havoc with Russell. How do you measure that? By historical terms? The chart I use on weekends on Hunter Killer Sub on Twitter, it's the detrender. Look what the detrender is showing you. Detrender is a distance of where you are versus a particular moving average. For us quants, that's how we look at it. It's how much that rubber band in percentages has been pulled. And we're historically on that measure are extremely oversold. But other measures are not confirming it. And as we have discussed over the years, no one indicator is going to give you a true picture. Because indicators based on settings, which I suggest do not change, leave it as they are. But even if one given indicator cannot catch all the tops and bottoms or warn you. So you need what we call, in legal terms, preponderance of evidence. Look at number of charts and see what is it telling you, and then let it sink in. Kind of look at your charts, sit back, get your latte, and say, okay, this said that, this said that. Okay. 70% are short, therefore we are short. Now, here's another kick in the gut, all right? We use timing models just to get a sense of the market. Here, not say trading it that way, because it's a timing model, so the biases, okay? The weekly is about to go to a sell. I haven't been on a sell, and this is the same model we've used probably 4 years now. It's trend following, something very, very simple. And you want to keep it simple because you want low degrees of freedom. If you jack up your degrees of freedom, the mathematicians will tell you you're curve fitting. And you're going to see any chart you want. But then keep it low. Look at this. We have the last buy we had was in January of 13. And we've gone 2 years on the weekly time as a buy. Right now, we're at the cusp of going short. If that happens, if you think this is a kick in the gut, yeah, we may even see 1,800 flat.
Wow. So you're getting bare. So how are you playing? Are you just selling all the pops here, Fari? Is that how you're playing this? Like every time we get a nice little rally here, looking to book some of your longs or take some of your longs off or initiate shorts?
Excellent question. Here's what we do. Our philosophy has been you have to be in two markets, futures and options.
Okay.
They serve different purpose. Okay. So on our options, we're pulling back on any call spreads Ethan has been very busy with his puts, and they've done very well. The only collar spreads we've been in has to do with the individual names that who have been possibly like an Apple type, who are kind of denied what's happening with the marketplace. Okay, which is very by the way, for Apple being such a big part of Qs, that's an anomaly. But it's actually relatively held up nicer.
It's up again
so
today.
Those are the only time we were using calls. We're pushing more into puts. On the futures, that's I'm flat during the day. I mean, at the end of the day, legal day. During the day, yesterday I was short probably 85% of the trades. It's not that there's no opportunities on the upside. So yeah, sometimes they get so pushed during the day. There's the compressed spring that's coming to you. It is going to push you up. So yeah, you may take it 1 or 2 points, but don't let it ride too far. So we closing the long futures very fast. We're letting the short futures to play. Okay, a little bit more patience there.
Fari, and you're talking about. I got some Nita and people in the chat asking what chart you're talking about. Are you talking about the E-mini futures?
I'm talking about I was talking about the two charts we do. One is the D trend. We're talking about the Russell. That was a D trend there. I'll be more than happy to post it for you guys shortly. I post them on Hunter Killer Sub. It's @Hunter Killer Sub, which is dedicated to market timing only. I'll try to capture right now and refresh that. The the timing model, that's our SP1 Momo. That's got 3 subgraphs in there. I'm capturing that as well, and I'm going to post it in a few seconds. Well, actually, while we're in this conversation, so they can get a chance to look at it. I'll be more than happy to hash market pre-market, so your folks can get it quickly on their feed.
All right.
Well, thanks, Fari. What individual stocks are you looking at here? Because you were looking at stocks like Apple that are holding up well, but you must be looking at stocks that aren't going to hold up well. And are you out there, picking on specific issues here, Fari?
I'm an index player, so in the market dropping this fast, I'm really concentrating on the index itself. Okay. We play some Qs, but not individual names. Again, right now is earnings season, so as a matter of fact, with the stocks that I'm looking at on the downside, it is pretty much a partial hedge. What if my shorts are wrong? You see my point?
Yeah.
Because there's going to be some push here. Now, I also questioned the market in the last Saturday, and I said, and here's a philosophical question: if the techs here don't hold, then what we're going to do? Okay, it's crucial the techs here to hold on and help in the earnings season. If they don't, we're going to get a pretty decent wash. But remember, be careful what you wish for. Just getting a flush doesn't mean we're out of the woods. This could go on. Who knows? We're all hostages to the order flow. How do you know what the order flow is tomorrow? We don't. How many times? What's the next FOMC? Well, out. It's a bit out. I suspect that we'll have some shake first week of November. You got non-farm plus got elections. That could be a tremor. Maybe we're getting set up for that. Maybe, again, historically, if you go back, early part of November, okay, up to Thanksgiving has been what we call launchpad mode. That means we get a complete flush. It happened in 2011, happened in 2012, and they were historic, what we did, especially if 2011 was massive. We went up 800 points in 3 trading days on the Dow. That kind of stuff, that cleans a lot of clocks quickly, as we say in Chicago.
Okay, well, what do you think of the Intel earnings here? Because last night Intel reported pretty decent quarter. They bounced the stock up over $1 after hours, but it has just continued to cascade through the after-hours session. It is now here in the pre-market session down 95 cents at 31.19. So okay, earnings
my trade is hold.
Turned.
Here's Reg FT. We were in that trade. We are in that trade on the option call spreads.
Yeah.
We're smoked. Now we bought November's. Here's what we did. I told all my strategists, I said, guys, do not go weeklies here. Okay, on the call side. If you're on the call side, do not go weeklies because we will have issues here and you market-wise that could influence it, let it ride out. That means give yourself a little extra time. Yes, we'll be buying a little bit more and paying a little bit more premium, but then you also, because you're doing, especially with your call spread, you're selling on the other side. So you're selling some volatility, and you're also selling some theta. Okay, so your rate of decay is slower, and your volatility is lower. Now, and if also you look at the term structure of VIX right now, the front month versus back month right now, you really don't want to trade this week or next week's volatilities because they're so high. I mean, this stuff is juiced up. Okay, this stuff is very, very juiced up. That means that what you may gain in a position in terms of X minus S on the Black-Scholes going your way, you're going to lose on volatility.
Right.
Are you with me?
Yeah.
Yeah. It's just the way the pricing is. And you know what? The other day I said that. I'm sure my buddies over at SIBO don't care for that. I said, hey, over at SIBO, they don't give out candies for nothing. Think about that, Halloween coming. Yeah, there's a reason they're selling it to you this way. Watch out. And those guys are no dumb. Being a market maker these days at SIBO is not a small task. It's heavy duty. So, especially because it's a much smaller club, and positions are much, much bigger. Okay. By the way, I've just posted this, guys, for pre-market. That's a D-trender, and then I'm posting the next chart, which is SP1 normal. I'm going to actually concentrate on the weekly chart of it, so you could see it in detail. The key thing is be able to, if we have a chance on that trade, to be able to survive the next week or two of massive gyrations. Keep in mind, the type of pattern we're getting, if it continues a little bit lower, it would, in my word, is welcome, because it's cleaning it's cleaning the system. Okay, it's a good flush. It's not great yet. I'm looking for a great flush. I'm going to 350, 375, 380, which is very rare. You may get it once a year. On my current oscillator, I want an up to down volume, down 12 volume, 90 over 10. 9 to 1, 10 to 1, 2 or 3 days apart, twice. And I want to see the trender even getting worse than this. Maybe negative 10. At 7 negatives, here's give you a measure. Historically, at 7 negative, that's what we were in 2011, Thanksgiving, 2012, a week before Thanksgiving. Okay. Right now we are at I think 8 something. Well, yeah, we're at 7.6. We hit 8.3 the other day. So we're a lot lower right now. That means I think the people on the Lasso 2000, they're feeling it. They're feeling the pain, as William Jefferson Clinton would say. I feel your pain. So.
Now, we obviously got oil too here.
Go ahead, sir.
We were talking about oil getting smoked here as of late,
yes.
and especially yesterday. Do you have any plays that you're looking at with oil?
We had some puts that we closed. As you recall, on your program and the Stocks and Jocks, I said about a month ago, this is all recorded, $60 WTI in 18 months, based on research that I'd seen from a hedgie. And it was not my work, but I called it out. And some people said, hey, did you stop at Denver? What's going on? What are you thinking? They're all laughing at me. Some guy wrote to me on Twitter. That's, by the way, Twitter is the best sentiment tool, because you see this stuff and you go laughing. It said to me, 100. Baghdad is going to fall. We're going to go 100. We can't go to 60. You're wrong. I said, why? He goes, Saudis will be bankrupt. I'm saying, no, Putin will be bankrupt. Iran will be bankrupt. Saudis will be in trouble. You know what? How about the following? What if Obama has a deal with the House of Saud? Then let's squeeze Putin. At this time where the sanctions are so heavy on him already. So they can't get technology, let's drop the price. You may see a coup in the Kremlin.
Hey, Fari, I got a question here from Rob Hood, one of our primary chatters here in the chat room, asking, does
Yes,
Fari envision a form of QE4 occurring, especially with everything going on right now?
Can't rule it out, but I think the PR probably against Auntie Jeanette. Okay, the public relations out there probably is not really welcome to that, especially after she just said, look, enough of buying, we're going to slow it down, and now we're going to be clear. You can't just go back. I don't think so. And the balance sheet is pretty heavy already. But you can rule it out. You know the politicians. Remember, nobody said TARP could pass, right? They passed it. So politicians could come in and reframe the question, if you will, and say, look, we have to. Otherwise, the whole market is going to go crazy. I think we have some room here. This is all healthy. So just your place on the short side. Look, I don't care which side this thing goes. Upward. I just want it to move. I don't want it to go sideways. I hate sausage days. I want the damn thing to move.
And I mean, that's what it's all about. Traders are loving this the last few weeks. Our friends loving it.
You gotta have the volatility, my friend.
Yeah, because if you don't have volatility, we're sitting here. You know, you can make money if the stocks go down. You can make money if they go up, but it's very difficult to make money when they don't move. So professional traders love volatility. Where your investors get scared, we love it because it leads to irrational pricing sometimes, and sometimes some great opportunities.
Well, exactly, at extremes. Here, the sausage days are only good for brokers. Okay, Chuck would love it. Chuck, are you hearing this? Yeah, he would love that stuff. Okay, or in my case, Tommy, interactive broker. Those guys love it. I hate those days. I sometimes walk away. I say, I've had it. This is it. Who is that going anywhere? We're taking a lot of risk for very little return. To me, when you have the sausage days, your risk reward are inverted. You should be trading these days. Brad Sullivan, the guy who runs our hedge room, he always says, sometimes when it gets dicey, he says, I'm under the table, under his desk, with a wireless keyboard. What that means is that a lot of people are not looking at the screens. They're too scared. That's precisely the time we should be trading. When things get dicey is where the opportunities are. Not easy for everybody. Remember, I've been just doing this 20 years, so it's kind of a second nature. But I thrive on days like this. Up or down. If you look at the bars, we've had some large bars to the upside. But right now, predominantly, we're getting bigger bars and further down. We're seeing at 3 sigma. Today, last night, we closed at, day before yesterday, I'm saying. Day before yesterday, we closed at 3 sigma. If we could, and we came in from -2 twice. Went to -3. We pulled a little bit to the side. I suspect, I would submit to you humbly, getting close to a possible wash. But right now, my charts are showing like at least 1844 on cash. Right now. So to get really there and happen, I think we're going to even reach 44s. I don't see 1800 yet, but by the time all the indicators line up, we could be there. People were throwing 1870 out there, and that's history. Look at the action now. So, great opportunity overnight. We were very busy with Forex because we have a lot of signups coming in. What Ashraf is doing, one of our fastest growing products. And so I had a lot of emails last night. I had a lot of it. My phone was ringing. So I came to see what's going on, if anything critical. And I see the market. I said, let's make some shekels here. Hello. So I traded a little bit last night. But the problem with the trading at night is a little bit thinner. And you need to get out fast because you get snapbacks quickly, and you don't have time to sit there and second guess yourself. And then you need your rest too. You need to rest because we're basically predominantly a U.S. hours, operating setup.
All right, Fari.
So you gotta get your rest.
Well, thank you, man. That's great. We got a lot of great trades coming from you there too. As always, it's a pleasure to have you on, dude. We'll see what the S&Ps do here through the open coming up in about 35 minutes. Thanks for coming on, Fari.
Thank you, sir. Thanks for having me.